Our next guest, that's going to be Alan Hibbard, precious metals and alternative money specialist at GoldSilver.com. Welcome to the show, Alan.
Hey, Tom. Thanks for having me.
All right, so let's get it out of the way. Gold hitting fresh all-time highs overnight. Now, Alan, is this on the back of, inflationary pressures? Because it seems like yields are coming down. That wouldn't be as supportive, but the dollar's also falling. That's lending some support. But is this about central banks around the world starting to scoop up even more of the precious metal at this point?
Well, yeah, it is. It's definitely central banks. It's definitely inflation. It's definitely tariffs, which are inflationary, and it's kind of uncertainty in general. So, yes, central banks have been huge buyers of gold. We saw that in 2024, and that trend is absolutely continuing. And now with the new incoming Trump administration, a lot of the uncertainty that we had going into it is translating into a different kind of uncertainty now that we're here. So, are we going to get tariffs? Are they going to be 10%? Is it Canada, Mexico? Is it 25%? Is it 50%? Or maybe we'll wait until next month, or maybe we won't do it at all, or maybe it's up, maybe it's down. I mean, all the back and forth is just volatility for markets in every way imaginable. So it's a combination of volatility, inflation, central bank demand. It all is extremely bullish for gold right now.
Yeah, and if you take a look at some of the inputs, and you mentioned it, the tariff headlines are causing a lot of the volatility, I think, in this space at this point. But, if the Trump administration is just using them as a bargaining chip, like it seems like, to get what he wants at this point. China is doing some retaliatory measures on their side, kind of pushing back a little bit. But, it doesn't seem like it's going to get exhausted anytime soon unless that dollar reignites at this point. And it seems like every time that dollar pulls back, you got somebody coming in there buying it, and that's going to lend some pressure. But, it seems like this is one of those asset classes, even though, people might have just 1, 2, 5% of their portfolio in it, it's worked out well, and it doesn't seem like it's going to stop anytime soon, Alan.
Yeah, I agree with you. And to your point, it is absolutely possible for the dollar to receive a lot of capital from around the world and for gold to receive a lot of capital from around the world. So, fiat currencies in general are unattractive, but sometimes you have to pick the least dirty shirt in the hamper. And a lot of times that's why the US dollar benefits. However, sometimes you don't want any fiat currencies at all. And no matter where you live in the world, gold is an attractive investment. So we have seen investors increasing their allocations. Yes, oftentimes it is only 2 to 5% of their portfolio. But there are a lot of investors that we're having conversations with that say, I feel more comfortable with 10%, 15%, or even 20% right now. And especially when you compare it to something like the S&P 500. Last year, the S&P returned 25%, which is incredible, but gold did even better. Gold was about 25.5%, close to 26%. So a lot of people don't realize that gold isn't just like sitting out of the markets. A lot of times it's better than the markets. It's less volatile. It'll reduce the volatility of your portfolio. And in many cases, it'll give you greater returns.
Yeah, you definitely have to wonder about currency risk right now. I think a lot of companies are on an individual corporate level at this point. But when you start looking at geopolitical risks, moving forward, Alan, with the new administration in, the resolution potentially in Israel and Gaza, Ukraine, Russia, does that go away anytime soon? Is that one of the caveats where are we going to see less political implications here for maybe the commodity space in general?
It's a good question, and I don't think that there is like one definitive answer. However, with all the tariffs and all the trade wars going on, that's a proxy war for a hot war. And if you don't have goods and services crossing borders, you'll have soldiers and bombs crossing borders before long. So we're in a situation now geopolitically where a lot of our allies are becoming enemies, or at least they're being treated that way. And some of our enemies are being treated like allies. So it's confusing in that sense, and it does create a lot of volatility, and no one really knows how it's going to play out. But I think a lot of investors are going to gold because it is a safe haven. It is a safe haven against geopolitical risk and all that kind of uncertainty, in addition to the business uncertainty, the financial uncertainty, and all that. So I think gold is going to remain attractive here throughout 2025 and probably the entire Trump administration.
Yep, definitely inflationary pressures due to those potential tariffs, we'll call them at this point. Let's hope they don't stick at this point. But when you look at, the rest of the commodity space here, Alan, crude oil is getting hit a little bit today, down over 2%. That could be a caveat also. If we continue to see oil prices continue to drip down, does that wash away some of those inflationary pressures?
maybe a little bit, but I think that the energy move is sort of a tiny factor in the grand scheme of things. Of course, it is important, no question about it, but I think that some of these other tailwinds for gold are going to be a much bigger factor. So even if energy comes down a little bit, there are so many other factors at play that we've mentioned throughout this conversation that I do think gold is going to move higher significantly throughout 2025.
All right, we'll continue to watch that story. Appreciate it. That's Alan Hibbard joining us, breaking down the commodity space. Have a great day, Alan.